over a few letters that I have knocked on my water. Go figure. Anyway, let's get rolling. So today we got a special thing we're going to talk about. We're going to talk about Ripple. Really, we're going to talk about crypto. So the idea being is that what value does cryptocurrency actually provide? That's not what I wanted. Wrong screen. Jeez, I'm starting off great. And share it away. There we go. Not what I wanted either. Why is this sharing the wrong screen? Said desktop 3, gave me desktop 1. Anyway, all right, let's get rolling. So we're going to talk today about Ripple. And I think I've updated here, crypto versus stock, crypto versus crypto. Is all crypto the same? XRP, we're going to look at the 90 rubber band, kind of see where we stand. No lights, no screen. Yes, this is a low, it's a low budget production. You know, you get engrossed sometimes, man. I'm trying to pull prints. I'm trying to research XRP to find specific things. And then all of a sudden I realize no lights, no camera, and the action, it ain't happening. Well, it is happening now. So let's dig in. So we're going to talk 90 rubber band. What does this mean? 90-day rubber band just comes down to what is the volatility of the market saying about the current position of the S&P 500. So let's take a peek at the S&P 500 and we'll dig into Ripple and kind of talk about the dynamics playing out there. What spurred this on to talk about Ripple? Well, it was a former TD Ameritrade executive that Don loves, not talking about how basically stablecoin's the future, crypto or blockchain is the future for markets. And so I thought, hey, why not talk about that here just a little bit? All right, let's bring up the SPX. So if we take a peek at the S&P currently, we're catching a bid today. Now, yesterday we kind of talked about, but yeah, well, we're gonna dig into the, we're gonna explode, we're gonna expose Ripple today, right? And but the reality is, in the process, we're also exposing many other companies that are publicly traded as well. But the SPX, we're kind of popping and we're dropping, we're fading from our highs today. You look at the best performing sectors, including gold. Gold is outperforming technology. I mean, let's be honest. I mean, the last week, gold has outperformed every other sector. XLU is the only one that's closed, and it's up 1% today. I mean, let's be honest. I mean, the market's not going anywhere. Your purchasing power in the S&P is not doing anything, right? Gold is way outpacing any sort of bid in the market generally. Gold is a runaway freight train right now. I mean, silver, SLV, I mean, it continues to pop as well. It's up 2% today. I mean, there was a significant bearish trade on Monday. I thought we might get a little traction to the downside, not necessarily going to 46 and popping to 48. But we're kind of at a critical mass in the market. And I don't know how long it's going to take for the volatility to really play out. But just realize, and we spent some time talking about this yesterday, yes, on last Friday's move was different than anything we've experienced since last winter. I was gonna say spring, but I'm not sure. March, April. This is the most volatility we've experienced in spring. This is the first time the S&P's actually put in a lower low here. We are not in a bullish trend, and so the idea here is that if you are a trader, do you take bearish positions too? I mean, I don't see how you can call yourself a trader and not play the long and the short side of the market, right? Are you really a trader if you don't play bearish trades and bullish trades? Can we say that? I mean, what defines a trader? You could say, well, I'm active in my management. I enter and I exit. Okay. Are you a trader and saying we're in a bullish trend? No. How can we be in a bullish trend after what we saw on Friday? If this doesn't scare you at least a little bit, not to go to cash, not to go to sidelines and pull out from the market, but you might have higher cash levels. How much? 30 to 50%? I would say that's pretty reasonable, depending on the types of stocks you're trading. I have my GP industrial and technology watch list over here. If you are predominantly owning these stocks, you might be 50% cash right now. Okay. I mean, think about this for a second. I mean, I feel like Jeff Foxworthy, you might be what? You might have, you might be over your skis if you are dominated by these names, companies like these, not necessarily Google, but if you've got Oklo and you've got CCJ, you've got, Array, you've got MVST, SMR, QS, if your portfolio is dominated by these names, you might be 50% cash. I went through this last Friday. The drawdown is huge. Having 30% cash might be too little if you're just dominated by all these names over here. Okay? And so the point being is, as we look at the S&P 500 and we look at the VIX right now, we had a decent pop. We're kind of settling out around 20, which frequently happens after there's a move. But guess what? We saw a similar move in August, and guess what? Volatility came right back in. It's not happening this time, right? We were down, up yesterday, and down today. The VIX is settling in at 20. We may find another leg higher. Why? Well, again, go back to the S&P right now. What happened Friday is different than anything we've seen since March and April. And really going back to December, we had a similar day on December 18th. Did the market fall apart? No. It took a couple months, didn't it? But the reality is the market did not get out of its way until when we formed a low in April. Let's go back to the VIX here. The VIX back in December hung out. We spiked to about 29, dropped here. We settled in at about 15 to 20. But the fact is we've been maintaining these levels all the way up in this trend. We might stay above 19 and 20. Okay, maybe if we get a breakout, we might see the VIX drop back down here to 15, 16 again, a la we saw in December. But the volatility is not coming off as quick, but we didn't go as high as we did on December 18th. Let's go back to SPX again. Where's December 18th? It's right there. Okay, so if you think the market's up, and away, you're ignoring all of the signs that Friday gave us. We broke our trend line, right? Here's your trend line right there. We also formed a lower low. Okay, can you just shrug that off? Friday was significant. We finished at lows. So for Ghost Prince, we shut down our SPY put vertical here, and we're looking to reload. Yesterday, I was going bullish yesterday. ARRY in Ghost Prince, we took an ARRY trade. I wanted to buy SMR, but the liquidity and the options were terrible. So it's like, how do you trade it? It's very hard to trade. You could buy stock, but guess what? This stock could drop to 30 tomorrow, right? These companies are highly, highly volatile. You think you can manage risk. You think you can get out gracefully. You can't, not at least every time. And so if you keep taking profits and you go right back in again in these kinds of names, you always have that 30 to 50% risk every single day. How do you keep doing that? You can't. Eventually, it's going to bite. And if all of a sudden your portfolio drops 30 to 50% over a matter of days, that's untenable. How do you work back from that unless that amount you're trading with like that way is only a small percentage of your overall portfolio? Can we always bank on the fact we take a 30 to 50% haircut and it always comes back? It's not going to always come back. And the reality is the cheese will move. Okay? There's nothing graceful about volatility. Don's saying it here, right? You cannot get out gracefully. It's why you trade options and spreads. SMR yesterday, I was pricing stuff. I'm like, how can I trade this? The spreads yesterday are pretty dang wide. Great activity, great signs in here, right? As far as opportunity, $5 spreads, it just wasn't working. You try to get to the weeklies and it just wasn't playing out well. Okay, you get in here, we're jumping to $5 spreads. It just wasn't a great product for options yesterday. Unfortunately, stock was up 20% today. Now it's up 14%. The fact of the matter is, as we look at skew, as volatility is still high but declining a little bit, skew is escalating again. We finally see a little bit of selling last week. And now we're seeing skew elevate. And again, we don't have a perfect picture as to why skew is going up, but in general, skew goes up because you're selling calls and buying puts. Not you, but institutions are. And as a function, this creates rising skew. We're finally getting a little bit of mobility in skew. Why? Well, we already had a little bit of an episode, right? Last Friday was a bit of an episode. If we look at DSPX, okay, dispersion index is dropping a little bit here, not a lot. We're still seeing a disconnect, right, between the volatility, VIXEQ, of the components of the S&P 500 versus the actual VIX. VIX is at 20. The component volatility of the 500 VIXEQ. The component volatility is up here at 45%. Maybe we'll start to see the dispersion of the market come in. Well, what does that mean? If the dispersion of the market comes in, DSPX, if the dispersion of the market comes in, is this bullish or is it bearish? If the component volatility, VIXEQ, is coming in, what does that mean? They're selling options or premium on the components making up the S&P 500. Is that bullish? Well, that's a change. We're going from buying calls on the components to selling calls, selling volatility. All right, so if the DSPX is starting to come in here, it's probably going to occur when the VIX has to catch up. So if all of a sudden we're selling vol in the components and the VIX is picking up, the dispersion comes in like we saw, for example, in mid-April into May. Is this necessarily bullish? Not exactly. We saw it in February, right? We saw it in March. We saw it in December, didn't really come in. Most of these occurred with some selling. Now, mid-April, this coming in, what we saw was a different tactic. We didn't see call option buying. We saw this after a correction, dispersion coming in. We saw massive dispersion heading into the lows, and we saw this come up as the market's rallying here. But the point is that volatility right now is just suggesting there's a significant amount of uncertainty, right? There's significant potential. And so we could deliberate all day long and argue, is the S&P in a bull? Are we in a bull market or not? Yesterday, we settled it. We're not in a bullish trend. If you like highs and lows, we're not in a bullish trend. We are in a neutral trend. We're also seeing expanding volatility. That's a bearish formation. Not a reliable one, but it is a bearish formation. If we take and say, look, is it a bull market? I've said it all along. We've not been a bull market. We had a bullish trend. And we have not had any change in trend until Friday. This is the first change that we have seen the entirety of the move. And so the idea being is that, look, we just have to be aware of our surroundings. Our surroundings right now are pretty dang scary. And it doesn't mean you just run for the hills and just sell everything and liquidate and completely pull away. No, be a trader. Look for bullish opportunities and bearish opportunities. Today actually might be a bearish opportunity because we got the rally, right? We've got the bear market bounce. We've got the oversold bounce. Now where are we going? Just retesting lows would be a decent trade if you are a trader. Selling your bullish positions you've lost in? No. Could you clip some stuff that you were profitable in? Sure. Raise more cash. Put on something that might capitalize on the downside. And if you're in these names, you better have higher cash levels or at least consider it. Otherwise, you are going to be okay with a 30 to 50% haircut. That's a portfolio drawdown, and that could happen in very short order. I'm not prophesying saying that's going to happen. Well, I guess it will at some point because you've already experienced it. If you were doing that back here, you experienced that fast, right? Probably 50% plus drawdown right here. This could be just around the corner again. So how do you deal with it? You either take the haircut, you either accept the drawdown, or you decide to preemptively do something by being a trader, right? Managing your portfolio and understanding risk. That's what we're talking about here. All right. Now, I want to show you something here. I thought this was pretty funny. I quickly ran to Jimmy John's. Any Jimmy John's fans out there? Anyone like Jimmy John's? It's not a bear market though. No, well, yeah. I mean, the reality is we're not in a bull market. Are we in a bear market? Well, I mean, I guess if you're defining it based on price, but I think there's a lot of stuff there, right? Does anyone like Jimmy John's? I like Jimmy John's. Well, especially because it's fast, right? They're supposedly freaky fast. So let's talk Ripple here. Gross. It's sliced deli meat, bread, some peppers, and I don't like Jersey Mike's. Jersey Mike's uses the lowest quality meat possible. They've got chopped ham. I used to be a meat cutter. So going back to going back to 1993, I was yeah. Are you talking about which? The unwhich? No, anyway, I was a meat cutter, right? And I had it, we would slide, we were a full service meat counter, so people would pick the meat they want. I'd wrap it in butcher paper and hand it to them. And deli meat, we'd slice it there, which they do now, but you don't get the whole, you get to pick your own meat stuff, right? But I remember having to slice chopped ham. I'm like, chopped ham, really? It's like 80% fat. And but again, that's the thing I don't like about, I know Don can't eat bread, but Jersey Mike's, they use the lowest quality turkey, right? I mean, it's just all their meats are like the bottom. Like when you order stuff, like you get it in stock, and you're behind your meat counter. There's the meat that is the lowest price you discount, and there's the good stuff. Jersey Mike's uses all the lowest bottom of the barrel meats. Get boar's head from Publix, yeah. Brian, if you don't know Brian is a connoisseur of everything, right? He knows the best of anything food related. Probably more than that. Jersey just sold for $6 billion. I get it, right? I think Jersey Mike's could be good if they use better meats. Their bread, I would like a little more density to their bread. It's a little too fluffy and crumbly, but I do like how they load it. I do like lots of lettuce. I'm a lettuce man. So I do like to have like the oil and vinegar, salt and pepper with the lettuce and the tomato. If they up their game on their meats, their bread had just slightly more density than the traditional, just kind of flaky hoagie roll. Yeah, Subway is not great. But anyway, Jimmy John's. This is the picture right here, right? So this is the guy in front of me. I've got make your own at home everything. Yeah, maybe so. But so I'm like here and I'm like, okay, so I got a turkey BLT with provolone. And I started drinking Coke again. I got to stop. But this might be my last day drinking Coke. But I got a Coke, and then I got they gave me a free cookie. And I had some jalapeno chips. I didn't eat breakfast. I was hungry, and I had my mastermind yesterday. Anyway, so I was hungry going through this thing, and I got this guy right in front of me, XRP XLM. Does anyone know what that represents? Well, XRP is what? That's Ripple Labs. All right. XLM, that's Lumen, right? So here we got Venom here. We got this thing up here. We got a little tag here. You don't catch it. He's got some side action over here. I would say basically, this is a crypto bro, right? He's got the Tesla. We're in Utah. We're not so, not as politically, right? But yeah, stellar lumens, right? So the idea being is that here he is in the drive-through, and I think this just purely describes a crypto bro. This is the guy that, probably has the Lexus, new Lexus GX, just because it looked like a younger guy too, probably in his like late 20s, early 30s. Probably has a $700,000-$800,000 home. That's not exorbitant, but stuff's kind of expensive in Utah home wise, or has become that way. You got the Lexus here, and so you got the Tesla, you got the Lexus GX, and you got like 3 or 4 kids, and like you just wonder, well, how are you living, right? How are you living at this point? So I would say that just purely to me is a crypto bro. So I thought, let's talk about Ripple Labs, because the reality is when we think about this stuff, and the prospect of blockchain technology is phenomenal, right? I get it. Joe Mowgli, or whatever freaking his name is, was on Twitter. I said it to our side chat here. Don's like, he's a monkey. I get it. He's a monkey, right? But here's the deal, though. You scroll down. I forget his name. It's Mowgli something, right? Yeah, it was Joe Mowgli, former ex TD Ameritrade CEO Joe Mowgli on CNBC. There won't be a stock ETF again. Everything's going blockchain. Well, let's talk about Ripple. I mean, this is probably, you think about, a business or being established as such, or possibly Ripple kind of defines that, right? So Ripple's established in 2004, launched as cryptocurrency in 2012. The real-time gross settlement, so RTGS system, utilizes blockchain to enable international payments. Operating at Ripple Labs, a single company, unlike many decentralized cryptocurrencies, XRP facilitates rapid, cost-effective cross-border transactions and aims to modernize the SWIFT system. Okay? Now, does this sound pretty exciting? Who looks at this and says, "Wow, we're going to replace SWIFT"? This is a company that established in 2004. Well, why cryptocurrency? What did cryptocurrency provide for XRP in 2012? What were they trying to do? They wanted money, right? They issued the tokens to generate revenue. To what? To build out Ripple Labs. What's interesting about this, though, and I don't think I have it in here. What kind of intellectual property does Ripple Labs actually own? What kind of intellectual property does Ripple Labs own? Does anyone know? What is their technology? How would you describe their technology or the access? Is there a lot of intellectual property? No. This is open source. Open source. Okay? So what they needed to know, right? They needed money to build this out. They went to the cryptocurrency markets. The fact of the matter is, a guy in his basement who wants to buy electronic products, this was an actual cryptocurrency back in 17, and basically he's like, "Look, you buy my if I issue tokens and you give me money for them, I'm going to buy stupid electronic stuff." Right? That's what he was doing with the money. Well, in the case of Ripple, I'm sure they were trying to build out their infrastructure to facilitate this, right? We established a network, called a blockchain. Well, what is a blockchain? Well, if we think about, let's just go to TD Ameritrade. TD Ameritrade has servers around the country, right? They probably got some in Texas and New York. They've got some in where are they located? Dang it. I can't remember the home office in the Midwest. They've got servers, right? Many servers that are centralized. All of the data stored in a handful of places and a handful of location. Yeah, they got it to Omaha. Yeah, Omaha, Nebraska. How could I forget Omaha? I worked for him for how long? Anyway, in Omaha. So the idea is we have centralized data. This was always the fraudulency of Facebook. Facebook wants to engage in cryptocurrency and the crypto markets? Absolutely not. Their whole premise is that data is centralized. We can mine it, we can scrape it, we can advertise to it, all this stuff. What does blockchain do? It takes those handful of servers and it breaks them up into thousands of individual nodes, millions of individual nodes. However, people want to participate in the blockchain, hook up their computer, and mine crypto is now a node. Blockchain is decentralized. And MCD says blockchain is abysmally slow way to record transactions. Really? It's actually not, depending on the type of system. Now, I got a couple of posts there on the blog talking about different types of structures, right? Bitcoin, for example, has one structure and there are other structures, right? The point is, depending on how centralized the structure is, again, proof of stake, proof of work models, all those require different amounts of energy required and speed of transactions. But the fact of the matter is, the SWIFT system was very, very inefficient. If you were, for example, in some, I was at this is about a year ago, I was at Honda. Our van was being serviced. I'm sitting there. This guy across from me, we just got talking. He was from Central Africa. And I'm thinking like Central African continent. No, there's a country called Central Africa. Okay. So there could be someone in Central Africa, right? That country. And they want to buy a MacBook Pro for $5,000. Given our old system, the Swift and all this other stuff, it would take them how many transactions? Several transactions to buy a simple MacBook outside the country. This guy posted something, it's like a number of years ago, saying I bought a MacBook for $5,000 in one transaction. It's pretty cool, huh? Here's someone that would take multiple transactions, significant amount of cost, suddenly can buy a MacBook in one transaction, one trade. Imagine if you had to break up your stock trades because you couldn't get the flow in there and you had to pay exorbitant fees. That's what exists for most of the third world. They cannot buy stuff, and especially not across borders, which Swift is designed to do, right? However, not very efficiently. And banks hold all the cards in this case, right? They're the ones that have to verify the money's there. They're the middleman that stands between you and your MacBook. And they may force you to make several transactions at significant cost just to buy a MacBook in a foreign country and bring it in. Because guess what? I doubt there's an Apple store in Central Africa. So the point is, Ripple Labs definitely filled a need. Were they able to gain access to capital? Yes, they issued their own tokens, a cryptocurrency, right? XRP, which I think is their token, it's actual cryptocurrency. They have their own blockchain. Blockchain just fragments all of the information that's generally centrally stored on servers. And guess what happens? If a transaction is made, they verify against all of the nodes. And if there's greater than 50%, it confirms that, yes, you have the money. Well, what does this do? By engaging in blockchain technology, you're suddenly not having to rely on your bank to say the money's there, right? The blockchain tells you you don't need third parties. You don't need banks. You don't need brokers. Suddenly, everything operates on its own. It's peer-to-peer. Now, Coinbase, it takes you out of that peer-to-peer sphere, right? Now, all of a sudden, you're going back to traditional banking through crypto. Well, how does that make sense? The whole idea of a stable coin? Anyway, we'll get there in a second. All right, so let's break down the business of Ripple Labs. Has anyone that are familiar with Ripple, has anyone heard about their revenue? Not really. This company has a $149 billion market cap. It's important to note this is from AI and Google AI, Gemini. Important to know the XRP ledger itself is an open source. There's nothing proprietary that XRP owns. It's open source. It's a user-run platform and does not generate income. Yes, there's compensation in terms of tokens by virtue of or crypto by those that are nodes that are operating and mining, etc., right? All revenue is generated by Ripple Labs, a separate entity that creates and promotes products and services using XRP. This is all I could find. Most recent full year revenue, $1.5 billion in 2022. Projected revenue is $189 million. The vagaries of XRP, an open source platform that anybody can use. In Q1 2024 sales, $285 million from the sale of XRP for on-demand liquidity solutions. They just sold more coins, right? Sold more XRP. That was their revenue. Well, it's not revenue. You're basically raising capital. It's a capital raise. So the point is that nobody knows anything about XRP, and it has a $149 billion market cap. Well, who makes money off of the ledger itself? The banks do. The banks use XRP's system, and they're the ones that are generating the revenue off it by selling their services, right? You want access to do a cross-border payment? Well, the ledger itself is the one that actually tracks whether you have the money to do it. The bank itself doesn't necessarily do anything, right? But at the end of the day, again, the banks themselves, typically central banks, Again, these are the ones that generate the revenue off of the RTGS system. Is this company really worth that amount of money? Has a $149 billion market cap. Oops, wrong way. Kind of interesting, doesn't it? How in the world do you justify $149 billion market cap? Because we're not actually evaluating the business of Ripple. We're only evaluating what? We're just looking at the share statistics, the amount of crypto in circulation. Here's the point, though, is XRP money. Now, I want you to think about this just a little bit because we're going to look at some stuff. We're going to go to RGTI for a minute. Is XRP money? Okay, so I'm going to float that out there. I'm going to let you think about it. We're going to come back to it. But let's take a look at another company here, right? We have a company that's very opaque and Ripple. Who knows what they're generating? They don't really have a process to make money. All they're doing is they're just supporting the blockchain. Are there some services that they're selling to banks to be able to use? Maybe. They're certainly not reporting it, right? All right, well, let's take a look here at, and let's look at XRP here. We'll go XRP to USD. XRP, USD. Okay. What has XRP done? Let's just back this out here. We look here just, 2025, huge run back here. This was Trump getting elected. Oh, we're going to go crypto. Oh, they're going to buy XRP. Why do they need XRP? They don't, right? Then they don't need XRP. So the point is they had this big boost here and it's just done nothing since. All of this boost back here, and it's still holding on to it, by the way, is purely a result of the thought that XRP has value, right? Has value. Oh, and the value is gonna be created, or the need or use case for XRP goes up because the U.S. government's gonna invest in it. All right, I got some land to sell you, right? Anyway, let's look at RGTI. What does RGTI do? And I know I pick on these companies all the time, right? But here's the deal. I also trade them too. So you get two sides of it, right? And if I trade them, I'm going long, generally speaking, through options. But RGTI builds quantum computers and the superconducting quantum processors unit, right? They offer QPUs and 9-bit quantum processing unit, Okay, this sounds amazing. This company, oh man, this is going to be in high demand. They're selling all this. They've got to be killing it, right? Well, let's come here. Let's look at financials. What kind of revenue is this company generating? Wait a second. They generate in the trailing 12 months, $7 million in revenue. Wait a second. Isn't quantum in huge demand? They're making these QPUs. They're selling them to the United States, UK, Europe, Asia, internationally. 84-bit, that sounds amazing. 9-ubit, quantum processing. This sounds phenomenal. And yet, look at the financials. In the trailing 12 months, they've only generated $7 million in revenue. The company lost $169 million last year. In 2024, they lost $200 million. Their revenues, they've gone down nearly 50% since 2022. This company's been around since when? Go back to profile here. It's been around since 2013. Why is a company that has no product to sell publicly traded? Any thoughts on this? Why is a company like Rigetti, which clearly has no product, they're not generating any revenue, and it has what kind of market cap here? It's an $11 billion market cap. Why did they issue shares of stock? It comes down to one thing, right? They needed money. Right? They needed money to do what? To try to develop a product that they currently didn't have. Right? We give them $11 billion valuation on $7 million of revenue. Well, they must be looking at just getting this huge boon around the corner, right? Let's look at revenue here. So this year they're projected to generate $8 million. Whoopity-doo. Next year, this is the boom of quantum, $21.5 million in revenue. So here we're looking at this year and next year, and wow, 21 million. And it's a what? Let's go back. Let's look at the market cap here. It's an $11 billion company. It's crazy, isn't it? Is this any different than XRP? Well, XRP doesn't release its actual earnings or revenues, but it really doesn't have prospect for earnings or revenues. Does Rigetti? Rigetti doesn't even have a product for all intents and purposes, right? Rigetti does not have a product for all intents and purposes. Could it be 10 years away? Well, guess what? We're already 10 years down the road. When did this company go public? It was founded in 2013. When did it go public? RGTI. When did RGTI go public? Let's back this out here. We go max available monthly. This company went public in 2021. So we're now 4 years down the road. They still don't have a product. They were founded over 10 years ago, 13 years ago. They still don't have a product. Well, why are they publicly traded? They want to finance what? Just like the guy in his basement, he just wants your money. He's going to buy stupid electronic stuff, right? Isn't that just what Rigetti is? So we'll go here to financials. We're going to look at cash flows. So we go to cash flow here. We say, okay, well, where are they getting their money? How do they live? Right? The crypto bro down the street with the Tesla, right? The $800, $900,000 million home, the Lexus GX, 4 kids and a wife in his early 30s. How does he live unless he's got family money? Well, did he speculate in XRP and lumens? Maybe. But again, are you just going to buy stupid electronic stuff like a Tesla? Sorry, Don. But operating cash flow minus 53 million. Investing cash flow 441. What are they doing here? Right? Net invest. This isn't even this isn't even property, plant, equipment. Net investment purchases. What the heck is that? This is a quantum computing stock. Aren't they working on financing, building a supercomputer? No, they're investing in stuff. What are they investing in? I have no idea. Well, where do they get the money from? How do they live? They've got 57 million in cash, right? What are they burning through in terms of operating? Let's go back to income statement here, right? SG&A. So again, we don't really have any cost of revenue because there's no product, right? Operating expense, $80 million, right? Operating expense, $80 million. Go back to cash flow. How much cash do they have again? Ending cash position. Well, it's capital expenditure. So where do we go? Cash balance sheet. How much cash do they have? Total assets, current assets. They got 192 million. All right, where do they get the money? So go back here to cash flow. We look at what? We look at financing and cash position. It says 57 million there, right? They barely got enough cash for 1 year, not even a year, right? 80 million in SG&A, operating expenses, right? They don't have 1 year of cash and they don't have any revenue. It's a problem. But let's look, how are they living? They're issuing shares of stock, 548 million. I know we've looked at this before, but what is the business of RGTI? They're good at losing money, right? So right here, this should tell you everything. If this were a cryptocurrency and suddenly we have a company, there's issues, significant 500 million in tokens or crypto, what would you think about that company? Because there is no business here, right? Everything comes down to, for these kinds of companies, share statistics, right? There's no debt, no lenders. I get it, right? There's not a whole lot of debt in this company. It means it probably is going to go bankrupt. Let's look at the balance sheet. How much debt do they have? Total liabilities, 158 million. There's actually debt on this company, right? Current liabilities, total non-current liabilities, long-term debt, 6.6 million, derivative product liabilities, whatever that means, right? Other non-current liabilities, maybe you got some capital leases, among other things. Long-term debt's about 6 million. That's not terrible, right? Current liabilities, we look right here, current debt, about 2 million there. So that's not, they could easily pay that off, right? So does this company have jeopardy of going bankrupt? Not really, but they're just a cannibal, right? They just go through and they just consume capital, right? They just blow through it. Again, They must be investing in property, plant, and equipment to develop their ability to produce a supercomputer. No, they're not even using the money for that, right? Investments. And look, we're just going to have the cash or have some investments here so we can kind of float along and continue to pay our executives. At least XRP has some sort of intellectual property that unfortunately is what? It's all open source, right? I mean, at least XRP has something. RGTI has nothing. And they're not even using the capital that they're raising through the stock market, issuing shares of stock. Well, again, I just showed you that. I mean, Ripple does that. What's the revenue of Ripple? The revenue is what? 208. This is a what? This is selling shares. 285 million. Well, at least they issued about half of what RGTI did. So we can talk all we want about fundamentals of companies, right? But the reality is, as an investor in RGTI, everything comes down to share statistics. What share statistics do I care about? There is no business. There is no product. There's not even investment to develop a product. But what do I like to look at here? Why would I trade or go long RGTI? It comes down to one thing and one thing only. It's right there. I think there's a short squeeze and it's attracting crypto bros to buy it. And we might generate a squeeze as shorts hedge that creates lift called a gamma squeeze. And we squeeze the shorts and then the crypto bros come in and they buy it, think they're buying value when they're not. There is no value. What is the intrinsic value of Rigetti? It's an $11 billion company. What is the intrinsic value of Rigetti? Zero. Right? It's zero. Rigetti has no intrinsic value. I mean, do they have patents? What's the value of those patents? They can't even produce a working model that they can sell. The intrinsic value of Rigetti Computing is zero. And you can say, well, what kind of assets minus liabilities? Okay, yeah, you're right. If we go to financials here, what is their net position? Again, we go to balance sheet. What do they have? What is their real value? Okay, well, let's take a look. Assets minus liabilities. The company's worth about 130 million, right? Total equity 126, and some of that's cash. I will give you this company's worth $126 million only because they have cash, because they've sold shares of stock and they haven't spent it all yet. But guess what? Their burn right now, last year, their burn was $80 million. If they cannot access the debt markets, this company's gone. There is nothing there. They're just going to spend all their cash, or they're just going to continue to issue more and more shares at a increasingly diminished value, and then you become Digital Rooster. Is this any different than Ripple? No, it's not. Ripple actually has a business, but it's open source. They don't make any money off of it. Maybe there's some ancillary products that they don't have to report. This company has no business, right? 7 million in revenue total. So again, we go back to this notion here that again, what is the stock market? What is the prospect of the market? Are we talking about efficient trading? So again, we can go back to Joe and what he had to say on CNBC. But at the end of the day, is there a use case for blockchain? Is there a use case for blockchain in markets? Absolutely. Just like the guy that was buying his Apple MacBook Pro for $5,000 in multiple payments, this is the model we're living in, right? Now we do have pretty decent commissions right now, but in a peer-to-peer network that's open source, we wouldn't even have that. Do we need TD? Sorry, do we need Schwab? Do we need Tasty Trade? Do you need Hood and all these other companies out there in the space to verify that you own shares? No, they're redundant. The blockchain aspect of things could entirely replace the current system we're in. Kind of interesting, isn't it? We could go away from buying MacBooks and many payments like we're basically operating now in financial markets to something that actually can be done peer-to-peer. You can actually exchange shares with somebody. And guess what? The blockchain knows that you own those shares. You don't need a broker to say you've got them, but you don't got them, right? Oh, we lent them out. What do you mean? I want my shares. No, we lent them out. Someone's short. There is no physical shares. Oh, wait, we shorted more shares than we actually own as a firm or have custody over as a firm. None of that, right? But you also don't have the leverage. So when we think about stocks or companies like Coin, is Coin a decentralized finance? Right? You don't, well, who's watching the store? The decentralized. So you think about it now, it's all stored on local servers, right? It's decentralized throughout the world with thousands of nodes or millions, or depending on the size of it, right? So the idea being is who's watching the store? About a million different eyes, thousands of different eyes instead of two or three. Does that make sense? So a decentralized finance does what? It decentralizes it. So any one node does not have control. And if you have a blackout, EMP, well, again, we're not taking out a single site or multiple sites. Right now, what happens is all of it is stored on a local server. And the reality is the company has control. In decentralized finance, the bank would not have control. What purpose does Coinbase serve? Is Coinbase decentralized finance? We'll say DeFi. No, it's not. Coinbase is centralized finance. Coinbase, back in 2018, was lobbying for regulation of the cryptocurrency market. Why? So they could be relevant. Because frankly, in a decentralized world, Coinbase is irrelevant. They're only a company that's providing what? Convenience to be able to buy and sell crypto and leverage yourself. Well, how much is that really worth? I mean, if we really move towards a decentralized finance market, so let's bring up Coin here. Coin is what? What's the market cap of Coin? $95 billion company. Is this really a $95 billion company if we really truly understood and wanted to be decentralized in terms of our finance? No, this may not be a company at all. I mean, even when you think about this, you want to buy stuff with Bitcoin. Like Don said, it's not very efficient, more costly, but you could actually convert your Bitcoin to, let's say, some sort of proof of stake model crypto token, transact it quickly and efficiently and cheaply, and then you do what? You convert right back to Bitcoin again. You don't even need Coinbase, right? This is what these networks provide. You don't need any sort of third-party verifier. But if you deposit your money in Coinbase, you transact in Coinbase, you're not in DeFi, you're CeFi, right? You're centralized finance. These guys are leeches, right? JP Morgan. Do we need JP Morgan to say you have money in the bank? Number one, you don't need to store it in a bank. And number two, you don't need to verify it because all of your information of what you own is stored in the blockchain. If you go to transact, it checks the blockchain and says, yep, you've got it. Over 51% or whatever, greater than 50% of the nodes say that you own it, and you own it, you can create the transaction. You don't need JP Morgan, right? You don't need to verify with the bank. You don't need a bank. These guys are purely a function of what? They exist because they want to create inefficiency that they can solve. Just like the guy that wanted to buy a MacBook in multiple payments, but had to do multiple payments. He had to go through JP Morgan or whatever the bank is. Banks are set up to make money. And the fact of the matter is they are redundant. So if we look at crypto versus crypto, what do we think about stable coins? Okay. What is stable about a stable coin? Nothing. All a stable coin means is that basically your what? Your ownership on the blockchain. Well, what do you own? You own a pool of assets like US treasuries, right? Like gold, for example, or whatever, precious metals. You might own Apple stock at some point. You might own Microsoft at some point. The stable coin uses the money that you give them to buy the tokens or coins, and they go out there and buy an asset like treasuries, gold, or dollars, for example. Does this create stability? No. Stable coins are what? Are they truly money? No. They're an investment in something. Is there a role for stable coins? Absolutely. If what? If the stable coin, if the crypto market using blockchain as the backbone, not requiring third-party verification, like a broker, for example, and an exchange. What if you eliminate the exchange? You eliminate the broker. You own a stable coin that invests in gold or Apple or Microsoft. That is the role of stable coin. It's not stable. It's just you're transacting in shares of Microsoft using a different facility, a different means, not an exchange. We're not using a broker. You actually own the claim on Microsoft, on Apple. Is this the future? And all of a sudden, Apple needs more cash. They want to issue shares. They might start to issue their own tokens, right? Their own currency, or not currency, their own coins, versus going through an investment bank like JP Morgan and having them very expensively, by the way, go through and issue shares. Ripple was smart. They needed money. They accessed the cryptocurrency market to raise the capital they needed to start their business, to fund their business, to develop their business. Unfortunately, they're open source. They gave it away. Yes, they try to sell some products, but no, they don't report any sort of information. They're not regulated the same as other stuff. Well, how does that compare to Bitcoin? So when we think about this stuff, stable coins aren't money, right? There's nothing stable, inherently stable in a stable coin, but it could be a very efficient way or a more efficient way to buy and gain ownership in shares of stock and treasuries, etc. But in and of itself, does it create a market? No, it does not create a market. And that's the problem. We assume that somehow, because we have stable coins, it creates a market for cryptocurrency. All it's doing is replacing something that's existence today for something else that's inherently more efficient. Okay? Let's come back to Bitcoin, though. Because I asked the question, is cryptocurrency money? Okay? Hankster says Bitcoin is tulip mania. All right. But what is money, though? What is money? Okay, because this is a big deal, because we have in stable coins would be an investment, right? It's not money, it's an investment. XRP is still an investment. They're going to issue more tokens or coins in order to fund their business, right? And certainly those that are helping support the blockchain are realizing some value through transactions, but XRP in and of itself does not. But what is money? So we're talking tulips here. Money is your proof of work, stored energy. Nah, there's actual. So again, proof of work is how it's disseminated, right? So how do you disseminate Bitcoin? Right? Bitcoin has already been mined that we have today. And then some of it's lost. Some guy lost a bunch of Bitcoin in a dump, right? So the point is this, not pet rocks. There are actual certain characteristics of money. Number one is that there is no value. Does Bitcoin have any inherent value? Hankster just said Bitcoin doesn't have any value. Right. Isn't that the point? Right? If money has value, it's not money. Right? So one of the main characteristics of money is it has no value. Except what? It's got to be divisible. There's a what? Right? It has to be rare. And through bit divisibility and the rarity of it, we have what? It creates a store of value. And what? A medium of exchange. So if you say that Bitcoin has no value, yes, that is the point. And that's why it can be money. If it were something like, for example, tulips, are tulips divisible? No, they're not. Are they rare? Yes, they are rare. It can be an investment, I guess, right? Is there a product? I guess we still like to look at a tulip. It's beautiful. But the reality is it fails as money. It is not money. Bitcoin is divisible, almost infinitely divisible. It is rare. There's only a certain amount of coins that will ever be mined. And as a result, because it has no value except as a store of value medium of exchange, because it's divisible and it's rare, it qualifies as money. The problem with XRP is that they're going to continue to issue shares, just like Rigetti. Rigetti will forever issue shares because they don't have a product. They have to live. They have to pay their selling and general administrative expenses. They have to engage in investments that are not related to PP&E. So what backs up Bitcoin? But that's the whole point. There is no value, right? There is no backing. That's why it's money, right? Money has no value except as a medium of exchange and store value, and it has to be divisible, it has to be rare. Let's talk gold for a second. What economic value does gold have? The USA does not back up dollars, right? There's nothing backing dollars. Dollars are not, again, they're not owned, they're produced by a private bank, right? They're Federal Reserve notes. You go to Hong Kong, you could have SHSB notes. There are some Chinese government notes, but you have notes from banks, right? The dollar, there is zero backing the dollar. Okay. So gold, what value is gold? It's non-perishable, right? But what economic value does it have? US dollars backed by the US military. It's not. Gold is not money. Is gold divisible? Yep, it is. You could have dust, you could have flakes, you could have bars. Is it rare? Yes, it's rare, but not too rare. Platinum is really rare, right? It's divisible, it's rare, and it has no real economic value. Yes, it's used for electronics, but a very small fraction of gold. What's made gold money over time is because it has no real value, but it's divisible and rare, right? You can't print it out of thin air like you can a dollar, right? A US dollar technically is not money because why? It's not rare. It can be printed out of thin air. But Bitcoin is a very significant technological advancement into electronic forms of money that have no value. And everyone gets caught up there because we think gold has value. Gold has zero value economically, right? It's heavy, it's soft. There's very few use cases for it. And yet it is smoking the S&P 500, right? Gold is smoking the S&P 500 and it has no value. What does that tell you about US stock market? Gold has no value and it has a negative return over time because you got to store it and whatever financing course costs or whatever, right? But if you buy it with straight cash, you own it outright, there's no claim to it, you still have to pay to store it. Gold has no value. And yet it's smoking the S&P in the last 12 months by 12%. So quantum computing can kill digital currencies. Probably not. Right? I mean, again, you'd have to, again, it's decentralized. If quantum computing can destroy digital currencies, cryptocurrencies, for example, what can they do with your money and your assets stored on a centralized server with a broker or a bank? Think about it for a second, right? It's like the case, for example, of those that says, oh, Bitcoin's used in money laundering. Okay, but the dollar's used for money laundering significantly more than crypto is. And is there a bigger money laundering place than New York City? No, right? So the idea is that if quantum computing can crack the code here on crypto, it can crack the code on any bank, right? So the reality is, are you better having your ownership decentralized, where they'd have to hack every single node, or at least over 50%, or on 2 to 3 servers, right? Locations. So again, you may have a preferred form of money, right? But it doesn't disqualify Bitcoin as theoretical money, right? But again, XRP, not money, right? Most cryptocurrencies are not money. They're actually an investment where these companies may not have any prospect for earnings anywhere, and we're still giving them a $149 billion valuation. Pretty crazy, huh? It's just like we also prop up a lot of biotech companies. We prop up a lot of technology companies that have no value. Okay. So we kind of did this today. Just, again, what is the prospect here? We talked about stable coins. We talked about crypto. We contrasted companies like XRP with Rigetti and showing how they're pretty similar in terms of their operation and their funding and their capitalization, et cetera. Blake is on. He's ready to go. How we doing, Blake?
Good. I'd just add to that. So I was literally stopped by my neighbor yesterday, and he said, "So what do you think the difference is between the AI bubble versus the crypto bubble?" And what did I go to? There's no revenue in crypto.
Right. And there's no revenue in quantum computing either.
Well, and the AI, there's just, like I said, we're just passing around the circle. Don't take any, just pass to the next guy.
Yeah.
And it just
Well, there is $22 billion in revenue in crypto. Or sorry, in AI.
Yeah. And it's just being passed around. So you have the expenses and the increase. So I'm going to be talking about utilities today. I still think that cost is going to keep going higher. But yep, there's a difference. Crypto has no revenue.
Yep.
No revenue at all.
And that's the thing about, $149 billion valuation for XRP, and it's open source. Yeah, I'll leave on that.
Yeah, well, yeah, I love the picture of the car you sent. That's very Utah, though, too.
Yeah.
I think Utah has to be the #1 Tesla 3 capital in the world.
I think so. I mean, again, it's just, there's definitely in Utah the desire to be entrepreneurial and make money easy, sometimes the easy way, right? And there's a tendency to kind of create circles of influence to make money, and that generally goes poorly when we see a downturn.
Yep, exactly. And for all the car people out there, the Tesla 3 is just the new version of the BMW 3 Series. We want to pretend that we have money. We want to pretend that we're super awesome, but you're probably going to struggle with that payment when the economy turns.
Well, it's like, they talked about like an inner city, right? You can go out there and spend $200 on Jordans and your social status goes up. I mean, the Tesla 3 is the equivalent of Jordans.
Yep.
You buy a Tesla, okay, suddenly we've made it.
Yep. Don't believe me? Look at my car. Parked right there.
Right.
So.
All right. We'll take her easy.
All right.
Thanks.
Folks. Appreciate it. All right. Good afternoon, everybody. How are you? Hope your day is going well. So